Well, g'day there everybody. Thanks a lot for joining me on this Tuesday afternoon market recap. I hope you are all doing well no matter where you are located right around the world. For the next 5 to 10 minutes, I am going to give you an update, my thoughts on what the market is doing as we move into the second half of this trading week. If this is your first time here in this public forum, I would encourage you to stop this video and to go back and look at, videos over the past month leading into, of course, what was a very bearish October when we started to move relatively bearish up here, or at least very neutral. And we caught, of course, the sell-off down to not all of the lows, but at least a major portion of that bearish move. And most noticeably, lately, where we have really expected this bounce to come. It really began on the 30th, the second last trading session in the month of October. We first established that open window. And really since this formation just here, we've continued ever so slightly. But after the back of the midterm election results, we saw once again that secondary open window establish itself on Wednesday, which is then turned this into a 3-day reversal pattern leading into the weekend. This is what we call an evening star reversal. And really our narrative, or at least our outlook, our forecast on the market is that, look, overall the markets still remain healthy. The markets are still in a macro bullish uptrend. The problem is, for the story, or in order for the story to continue higher, i.e. to take out the all-time highs most recently in the months of September and October, they are a little different between the US market indices. At the moment, we are looking at the Dow Jones Industrial Average. But getting back on topic, before we can actually take out these swing highs and print fresh new all-time highs, which I am expecting for the calendar year 2019, we actually need to come on back down and close a bunch of these open windows that have set up over the past 2 weeks. Now, really rewind to yesterday, Big Monday's candlestick. We've got the Dow Jones Industrial Average. It did close down over 600 points just here. The good news for people who listen to me and follow along with the analysis is that we've been largely just waiting and expecting a similar move to actually set up. The good news was that it happened yesterday because it brings us closer to ultimately coming all the way back down to 24,750. Today on the Dow Jones Industrial Average, we closed down another, just shy, of 160 points. We still have a little bit of an upper week, which is indicating that, look, the bears still have control of this market. The good news is that we've closed this first open window. So essentially, we've ticked the first box of confirmation before this market can move higher. The problem is we still have a secondary criteria box still open. And what that presents for us is that the markets still have to pull on back down a little bit further. Now, I've had a lot of questions over the weekend and really throughout this week and last week and past week saying, hey, do I jump on board with this bullish bounce? And also, pardon me, do I need to short this little bearish move that we have been expecting? And my answer to both of those questions is no, just simply leave the market alone. Really what this is just simply market noise. You can see that largely the market is starting to move into unchanged territory for the entirety of November 2018. And what appears to be happening is that once we come on back down and close this open window, this is going to be the final opportunity. Not immediately. It may take a few sessions, if not a week or so, once we close this open window, to really form the foundation, to form the base, to price in or at least put in a bunch of bullish candlesticks, which is setting up with certain technical indicators, which really suggest that, look, one, the market has truly bottomed. We're starting to see potentially that of a higher low relative to where we were later in the month or in the late stage of October. And that's going to be the opportunity where instead of jumping in here, right, with the FOMO and sort of the emotion, the market noise, drifting backwards and forth, this is going to be the critical location where X marks the spot, which is going to price you in ultimately at really the best price prior to the bull market continuing higher. So a long story short, for now anyway, the market is still in a correctional type of zone. And the best way of putting this really, and I spoke about this over the weekend, what would be most bullish for this market, as odd as this sounds, would be for the market to actually pull on back down and close these open windows. Conversely, what would be more bearish for the market longer term would be to see this market actually take out or come all the way back up to 26.5, which is its respective area, really all-time high on the Dow Jones Industrial Average. Because what this means, if we were to do this, and I'm very happy and very glad that we didn't just rocket this week to the upside, is that ultimately we would have to come all the way back down, and the odds of the swing low being taken out, if this was the case, go up exponentially. Obviously, we've gone through door number 2, or a different sort of pathway, which means that, look, after this evening star reversal, which set up again into the close on Friday last week, we're seeing the markets pull on back down. And although it is very short-term bearish, I assume a lot of people unfortunately, who do not understand technical analysis and cannot really read a technical chart, have really positioned themselves for this market just to continue. The majority of those traders at the moment, if they're swing trades, right, or anything longer, are underwater, which is a shame. It's disappointing, but hey, that's just the way the market moves, unfortunately. But really what's going to happen is that once we come on back down here, the sentiment, right, the public discourse, the media, so to speak, are going to move relatively bearish on the market, but that is when you want to ultimately flip and go long. So this has been somewhat of a waiting process. What I can say is that we did take advantage on the short side of the market leading into the month of October. We were very concerned about what was going on when we started to develop multiple fractals of divergence, and to see that ADX indicator not really confirm any of these bullish movements, these very short-term bullish movements, with the CCI absolutely tanking. Not to mention, of course, breaking a lot of these accelerating fan lines off from either intermediate macro bullish trends or even the macro bullish trend itself. The good news is that this is a basing process. This is an intermediate correction within that of a larger macro trend. And these sort of symptoms really just take a little bit of time until we can really sort of work through it, flush out a lot of those weak longs and over aggressive, sort of short sellers or short positions until the market will ultimately stabilize. All right. And then, of course, we'll start taking a bunch of bullish trades. Now, that was really just the Dow Jones Industrial Average. Again, you can see similar types of formations, upper wicks on the S&P 500. On the NASDAQ, again, what do we have? We have an upper wick. The good news too is that we are not establishing any open windows this week. So really what this suggests is that once we close these windows across the NASDAQ, across the Dow, as I've already pointed out, and on the S&P 500, you have to allow, of course, a little bit of wiggle room for these markets to overshoot those open windows. But what you need to pay attention to are reversal signals around these macro areas of support, most recently towards the back end of October. I'm going to keep you updated on this, but also when we start looking at individual companies as well, we've been looking at Apple. Okay, this is ticker symbol AAPL for Apple computers, coming all the way back down to $191.47. If I just leave my cursor over this candlestick here, and if you pay attention to this little red line I've drawn, L stands for low, which means today's low price, right? The trading session low. You can see that the low price was $191.45. So we were off this mark, all right? We overshot it by 2 pennies. I mean, that was it. So what this is telling me right now, mixed with the candlestick body, is that traders are respecting this open window, which was really finalized or printed in the last session of July 2018, and it's starting to align quite nicely because the NASDAQ itself is very close to closing its open window. So again, as the market turns relatively sour, as it begins to seem relatively bearish, as more and more people begin talking about a larger correction on the cards, pay attention to the technical picture, because I'm telling you at the moment, everything is taking place and shaping up as it should and as we have expected. All right, that's really, really what's under, or at least the undertone of the market at the moment. If I continue with a bunch of other stocks, Amazon appears to be finally coming back down to close its open window. We've got Boeing Airlines, you can see, starting to roll over. This is what we've expected. It's closed the window here, printing at 345. Baidu, sitting on 180. We've been speaking about Baidu for a very long time. This is a very nice trade setup. The market is still not back down, ultimately as low as what they should fall. So again, I'm not looking to jump into these trades at the moment, but they're aligning very, very nicely. We've got Caterpillar. We've got a Gravestone Doji, right? We tried to fill the window. We couldn't do it. But this is a very bearish candlestick. And we've got our target down here, whereabouts at the open window at about 116. So a lot of these trades are starting to turn bearish, right? Or at least the picture's shaping up more bearish. One of which is COP, which appears to be coming back down brilliantly, absolutely superbly to $62 per share. Loving that trade setup as well. We've got CVX turning, coming back down to about 112. And once again, you begin to understand the fractals of the market, how you need to see individual stocks confirming the market movements, really understanding the tone of the setting, or at least the chart in the background, which then interrelates back into the market indices. One, it will keep you out of a bunch of really short-term trades or sort of knee-jerk reactions, okay, that are going to get you in a lot of trouble. But two, when you begin to read it and really thoroughly understand the composition of the market and individual trades, you'll be able to wait, sit patiently, and then enter when you deem, of course, the time is right. And I'm telling you right now, we're getting closer to that point, but at the same time, we still have a little bit further to go. IBM, what's happening? It's starting to roll. If this comes down anywhere close to 114, it's going to be a great trade setup. Netflix coming all the way back down to 280. We've been speaking about this since the gap. What happened? We closed it yesterday. Now we're sort of beginning to print a high wave spinning top candlestick. Interesting little candle then, or yesterday and today. Tesla, I'm not sure if this is a rising wedge. I've sort of floated the idea out there. Not all that confident in the type of setup. Tesla's been a little bit of an odd stock, but we did see a little bit of a breakdown yesterday. We didn't really continue today, which is good news for Tesla, but overall, it's still a stock that we're not really looking to trade at this current juncture. It's just not set up at the moment. So really happy about the technical setup. Don't kick yourself if you're not in a bunch of trades yet. Believe me, we'll be entering into them very, very soon, but we need to see ultimately that second window, or at least the first window, right, closed, dating all the way back to October, which is going to give back short-term and temporarily all of the gains that we have printed through to the peak really on Thursday, collectively across the board for the US financial markets, before we can begin pulling ourselves out of the hole that the market has dug in reaction, all right, off from this low that we've printed in the month of October. All right, so that's going to do us as at this Tuesday afternoon market recap. Any questions, concerns, email me. Otherwise, jump into Pro and have a look at that analysis class. All the best, everyone. James signing off on behalf of Pivot Point Trading. Farewell.